Hey everyone, it's Daniel from Infovest here. Just want to talk about some rate hikes decisions that was made by the Federal Reserve in the U.S. And wanted to talk also about Bank of Canada and the expectations that are now coming out with 75 basis point, a possible rate hike of 75 basis point rate hike in Canada as well. So let's first start with the U.S. So the U.S. just on Wednesday decided to raise rates by 75 basis point. So we're now in a range of between 1.5 to 1.75 in interest rates in the U.S. And the expectation was that they were going to raise rates by 50 basis points, but they didn't do that. They went more aggressive and they rose. They basically increased the rates by 75 basis points because of the CPI inflation numbers that came out on Friday. So with those numbers that came out, the inflation numbers basically showed to the markets that inflation, especially the headline number, was not really getting better, and inflation was still elevated. And actually, it got a little bit hotter than the previous high that we got 2 months ago in terms of the headline number. Now, the thing is, the Federal Reserve came out, the U.S. Federal Reserve came out, and they said that Powell said he was worried about the expectations that consumer has about inflation. Now, keep in mind, consumers don't know the difference between core inflation versus headline inflation. So the consumers and the media, the mass media out there, are going to project and portray the headline inflation numbers, which is going to seep into the expectations of consumers. So when you see headline inflation versus core inflation, I talked about this in the video, a couple of videos before. Core inflation, you're seeing core inflation come down, while headline inflation is still elevated. So you might see that theme in the next data points, maybe not. We'll have to see next month. But if that continues to be the theme and you get headline inflation come out stronger again, then it's going to be a problem. It's still going to be a problem for the Fed, because that headline inflation, if that comes out stronger, you're going to get the news agencies basically reporting on it. You're going to see it all on the news. You're going to hear it on the newspapers. And consumers are going to start making decisions based on that headline inflation number. So they're going to start deciding and spending and behaving as if that, inflation is continuing to rise and it's not getting any better. So if that seeps into the expectation of the consumers, then that will also seep into the expectation of businesses, where they can continue to pass the buck or increase prices on their goods and pass it on to the consumers, which means that they will start to think that, okay, 9, 10, 11, maybe 12% inflation is much expected. So if we're expecting it, let it be. And Powell mentioned in the meeting that this expectation needs to be changed going forward, because it becomes a self-fulfilling prophecy that if consumers expect that high inflation is coming and they keep thinking that and keep thinking that, it's eventually going to come. It's a self-fulfilling prophecy. If you think recession is going to come and everyone keeps talking about recession is going to come, it's going to come, then guess what? It's going to come, right? So that headline inflation is a number that we, as investors or traders or economists, or as we look at this market, that's one of the numbers we have to now track, because now it can become even political, especially as midterm elections are approaching this year. Now, for the Bank of Canada, after the Fed came out and did 75 basis points, you start to hear a lot of reports that TD, RBC, or CIBC started to come out, or BMO. I think it was CIBC and TD and BMO, and I think probably RBC. But they started to come out and they started to say that, okay, if the U.S. did a 75 basis point rate hike, it's very possible that Bank of Canada next meeting next month, you're probably going to see the same thing. where Bank of Canada, and we heard Bank of Canada, we heard Macklem, the head of Bank of Canada, come out and say that, yeah, they want to fight inflation. Yeah, they want to get inflation to the above the 3% target, and they really want to fight it aggressively, right? So they really want to fight it aggressively. They really want to go attack it. So what do? You front load on rates. You increase the rates aggressively, which the US did, and which is very likely that you might see Bank of Canada do the same thing and raise rates by 75 basis points next month. So when that happens, guess what? That's also going to put pressure on a lot of consumers. That's also going to put, yes, that's supposed to put pressure on inflation because everyone's trying to fight inflation and bring it down, but it's also going to put pressure on consumers, which is going to affect their spending habits, which are going to affect mortgage rates also, which is going to continue to rise, and people who over levered, they're going to feel a lot of pain. I think there was another article from, I think, Globe and Mail saying that 1 in 4 Canadians are likely to sell their home or be affected by the higher rates and forcefully sell their home because they won't be able to handle the higher rates that Bank of Canada is doing. So here's an issue that I see. If the self-fulfilling prophecy, whether it's in Canada or whether it's in US, where everyone starts seeing inflation is expected to be higher and it's not going away, it just keeps going up and up and up, and it's not going away, then guess what? The Fed needs to fight it. They're going to increase their interest rates, and you're going to see rates continue to also go up and up and up. And if that continues to happen, then definitely it's not looking good in terms of the stock market, in terms of possibly even the housing market, in terms of the economy, in terms of growth, and even jobs. Right? When you look at the Federal Reserve's projections, they came out stating that unemployment would slightly rise this year and next year and so on, and growth completely fell, and they wrote in their projections that even interest rates are expected to rise this year to about 3.4% and next year about 4%, right? So increasing those rates aggressively. And today we had few Fed members that came out, such as Kashkari. So we have few members that came out, such as Kashkari, and he came out and saying that, you know, a 75 basis point rate hike next month is possible, and I wouldn't mind supporting that as well, and then going with the 50 basis points afterwards from there. So let me know what you guys think. Leave a comment below, and let me know if you think that they are going to continue with the 75 basis point rate hike in the US next month. We'll have to, in my opinion, I think we'll have to see what CPI inflation comes out with in next month in terms of the data. And what do you think about Bank of Canada, right, raising 75 basis point? Is that a one and done kind of deal, and then they will soften the rate hikes afterwards, or are they going to go more aggressive like a lot of the Fed members and central banks around the world which are doing today? Are they going to do the same thing and then kind of taper off and slow down their interest rates afterwards? And what would it do in terms of the economy and in terms of recession? Would it bring it sooner? Would it bring it later? Right? When you look at the yield curve, especially the US yield curve, the 30-year to the 5-year, the 30-year to the 2-year, the 10 to 2-year, all of them inverted again, right? Especially on that meeting day when they increased rates by 75 basis points. So let me know what you think. Leave a comment below, and I'll talk to you guys later. Thanks. Bye.